Hey guys, what's going on? Welcome back to the channel, and this is where the bearish divergence we've been talking about since August 3rd has played out. We've seen a crash to 26k, and at the same time we've been talking about this double top formation, which seems to be playing out right now. So we're going to be talking about this double top formation and what I think is going to happen next in this video. We're going to be talking about that and a lot more. Subscribe to the channel and let's dive right in. So this double top formation is complete, but it's not validated. It hasn't broken down. We don't have confirmation of a breakdown. In fact, this weekly candle close right over here occurred just above 26k, and 26k is the base of this double top. So at the moment we are seeing less downside wicking compared to this period. So here we had a lot of buy side pressure, which was much stronger than what we're seeing right over here. But this weekly candle close occurred at a higher low. So that's an interesting development here. But what we're going to be talking about in this episode is also the psychological story that we're seeing in the volume. It's always important to talk about the psychological story here, because the sell side volume right over here reaching this blue box right over here. This is where we saw sell side volume be so high that we saw seller exhaustion. We saw capitulation on those pullbacks, and then we saw price reversals right over here as well on this dip in late March, roughly speaking, a price reversal once we got that sell side volume reach exhaustion levels. Right over here as well, back in mid-June, we got seller exhaustion levels. But the problem with this seller candle of the previous week is that we didn't get seller volume reach levels that have previously given us price reversals, and that's the problem. We haven't seen sellers capitulate. We haven't seen panic selling reach the point of seller exhaustion. So the sellers aren't yet exhausted, and what we're seeing here in the very early signs of this week, buyers aren't stepping in. We're still seeing a bit of seller price action, so we need to see a bit more seller volume come in if we're to see a breakdown from this double top to confirm it, because we didn't get a weekly close below 26k, we got one above. But if we somehow lose 26k on the daily and then turn it into resistance, that's a potential sign of confirmation, although we'd like to see higher time frame confirmation, which we're not getting at the moment. Is a downside wick from here possible? Yes, it is. It is definitely possible, especially if we're going to reach higher seller volume as a result of that downside wick below 26k. But for the moment, double top isn't validated yet. But what we need to talk about here is the technical uptrend. And we've seen this technical uptrend on the daily time frame start off in 2023. So it's been a year long, practically almost year long uptrend, dating all the way back to January 1st, roughly speaking. In this August, we've seen a breakdown from the technical uptrend. And when we see a breakdown from a technical uptrend, that means we're entering most likely a technical downtrend for a period of time. And the thing about technical uptrends when they're lost is that they are lost as support right over here in this region. So around 28,400. This is the support that was lost. And whenever we see a technical uptrend lapse, typically we can recover back here just to flip that into a new resistance. So technically Bitcoin could rally back to 28,400 as long as this base of the double top continues to hold, just to turn this region into a resistance. But here's why I don't think that's necessarily going to happen. Because we know here that if a double top is validated and we lose 26k, a measured move of this double top breakdown would see Bitcoin drop to 21,300, roughly speaking. And that's a level that's quite low. It's in the very low 20k region, not quite sub 20k, but right over here we had a inverse head and shoulders, the left shoulder, the head, and the right shoulder, and we broke beyond this resistance, which was, as you can see, never turned into a support. So this region could be retested as a support. We came close here in mid-June, but this is the region that we potentially need to break down from if we're going to see 21,500, 300, 200, depending on how you measure and how accurately you measure this measured move. But the reason that I think that we won't see Bitcoin rally to that technical uptrend is because we've lost a bull market moving average as support. this 200-week moving average is a level that has typically presented us with fantastic buy-side opportunity across previous cycles. It's been a generational bottoming out zone, but in this cycle, this is a much more complicated relationship with the 200-week moving average. Here, we failed to turn it into a sustainable support and we lost it. Here, it acted as a resistance. Here, we lost it again, but managed to reclaim it, and we're back down again here. So we can notice that we've weekly closed below this 200-week moving average once again. And if you're enjoying this video, feel free to subscribe to the channel for more videos like this in the future. And of course, leave a like, as it really helps with the algorithm and helps this channel grow. And technically, we could try to recover back above there, but I just want to talk about the other moving averages that we've also lost, the bull market bullish momentum indicators that we've also weekly closed below here. And this melange, this mixture, this combination of bull market moving averages and EMAs gives us a area of potential resistance, because on the mid-June rally we saw support at the 21-week, the green one, and the 50-week, the blue one. We found support there, even though we found resistance at the 200-week moving average, the orange one. We found support here, so we were able to break back above the 200-week moving average, the orange MA. But we've actually weekly closed below all of these areas, all of these moving averages. So these acted as support before, and they might act as resistance in the short term. And that gives us an idea of where this potential resistance area is going to be. The 50-week moving average, the blue one, suggests a resistance could be at the 27k mark, and the green moving average, which is quite close to the orange 200-week moving average, that's around 27,650. So we're coming up with a moving average resistance area that's quite clustered in between 27 and 27,600. And the problem with thinking that we might get this retest of the technical uptrend into a new resistance and then drop, the problem with that is that it's located at 28,400, whereas we actually have a potentially strong resistance in the form of these moving averages, this cluster of EMAs and MAs at the 27.5 region, this red box. So we'd have to get through this resistance first if we're even to talk about this technical uptrend resistance. So I feel like we might not get this bearish retest of this long-standing technical uptrend. And even though this is a technical uptrend that loads of people want to focus on and prefer to focus on, this is still the daily time frame technical uptrend. I prefer to focus more on higher time frame uptrends, which have higher and better signals in terms of where price could go, such as the weekly time frame. And in terms of the weekly time frame, we're having a resistance here in the form of these moving averages. So even though we could see a bounce going from the bottom of this double top formation, even though we could see some sort of relief in the short term, actually in the coming days, maybe coming weeks, some sort of relief, we'd probably see that go to 27.5 into those moving averages before probably revisiting this base once again. And that's going to be quite problematic because we haven't seen sell side exhaustion yet, and that seller pressure could really weigh down on price to actually force a move down and a breakdown below the moving average, the double top formation, apologies, in fact. So that's what we need to really be focusing on, this double top formation. We need to be focusing on this area, which was once a resistance, may act as a support, but only if this double top base gives way as a support. So we're very familiar with this technical uptrend. We're really familiar with the seller exhaustion levels here that we're not quite reaching in the previous week, and we're not also quite reaching this week as well. It looks like the seller volume is spread across 2 weeks. In fact, maybe we'll have to see a bit more seller volume to come in just to give us more indication whether we're seeing that seller exhaustion. Could those downside wicks give us the key to seller exhaustion on this move? We might have to wait for those downside wicks, but this double top, it is picture perfect right now. It is an M-shaped formation. It's as picture perfect as it gets, and it's something that we've been talking about earlier this month, fueled by the weekly bearish divergence from earlier this month as well, which we spoke about. So we're seeing the bearish divergence fuel this second part of the double top, which has completed. It hasn't validated. We need to see 26k get lost as a support and then turn into resistance for that validation and for breakdown confirmation to occur. In the meantime, downside wicking, it could occur, but 26k, if that acts as a resistance, that won't be downside wicking. That will actually be a breakdown followed by a relief rally into 26k to turn it into a new resistance, which could precede rejection, and that's something that would lead Bitcoin into potential double top confirmation, which would precede downside continuation to lower price levels for Bitcoin. So we know about this double top, but will this potential breakdown from the double top enable a 2015-like crash that we saw in 2015 when we compare cycles? You can learn a lot more about that video right over here. Feel free to check that one out, and I'll see you in the next one.